Hey everyone, welcome back to another portfolio update video on the channel. The portfolio is currently sitting at $7,921.56. For the day, we are down 22. I'm recording this on a Monday, so it is currently the Robinhood 24/7 whatever market. So we're down just a little bit. This includes after hours on Friday. For the week, we are up 143.81. For the month, we are up 140.19. For the 3-month, aka the all-time, guys, we are now back up to what is essentially an all-time high of $221.56, or 2.88% since May 31st of this year. So the portfolios are looking really nice, guys. Like I said, we're basically back at an all-time high. In fact, we're just about 0.3% off from a new all-time high in the portfolio. As you guys know, if you've been watching my channel since the last video, we had a pretty sharp decline. We were down $200 over on the portfolio on August 18th, and now we're all the way back up at positive 221, which is just great. If we look at this from a monthly perspective, from our low, we were up $515, which is just insane, absolutely insane turnaround in the market. Was very shocked by that, but I'll take it. So yeah, let's go over the new positions in the account. To start things off, these Laboo $4 puts that I opened quite a while ago, 8/7, so August 7th, I opened for a credit of 17 per contract. This is currently worth 4 per contract with a 7% chance of being in the money at expiration, meaning these are basically going to be worthless. So we are up about $40 on this position, which is just great. Moving on, I rolled out my key call to next month, the $11 strike. We opened this for a credit of $57. Which is great. And in addition to that, we are also getting paid a dividend this month from Key of $20. So not only do we receive a premium on our shares of $57, but we are also receiving a $20 dividend, which means we're probably making around 7% on this position just this month alone, which is amazing. And as you guys know, we originally bought Key at a cost basis of $9.30. So selling for $11 a share, just as the call option states, would give us a pretty nice gain, as well as the dividends, so I am totally fine with that. So it's looking good on Key. Moving on, Laboo, I sold the $5 call for an average credit of $38, which is about 7% ROI on this position. If it ends up expiring in the money or worthless, regardless, we're still going to make 7%. So that's a pretty great premium there. Moving down, we have the T1450. Open for a credit of $46, currently up $5 in this position. This is for the 14.5 strike on AT&T, so that's looking good. MPW 750 call, this one's out of the money by a couple percentage points. Sold for a credit of $26, up $4 overall. This will bring in a nice 3.5% gain on our shares this month. Not to mention, if it rallies past our strike, we'll also get an additional 3% gain on that position, so that's looking good. Debit spread, still holding on to this guy. Plan to hold on to it for a long time. So yeah, we're currently up $3, but this thing fluctuates like crazy. So yeah, just gonna keep holding on to this. But yeah, guys, we probably pulled in around 150 in premium this month. Including dividends, probably around 180, which is really good. So by the end of the month, we'll be hopefully around $120 above where we currently are, if all things stay equal. If the market goes up, obviously more than that. Market goes down, a little bit less than that. But yeah, pulled in a ton of premium on the options for this month, as well as the dividends. Not to mention, we've got almost $7,000 in buying power just sitting in cash on the side. As soon as we get any kind of pullback in the market, I'm going to open a ton of cash secured puts, just kind of waiting for the right time, not really rushing to get into any positions like I used to be, really trying to play it a lot more safe, especially after we experience this big drop and then rise. I'm really de-risking the portfolio, selling at the money calls to hedge my downside, moving everything into SPY, and I'm closing out a lot of my individual stock positions just to play it a little bit more safe going forward. So yeah, that's the plan. Basically just keep buying SPY, S&P 500 ETF, and keep selling calls month in, month out, until we get rid of all those shares, which we can then move into SPY. And lastly, selling cash secured puts whenever we get any kind of pullback. Past that, let's move into the stock positions. You can see got a much larger position in SPY now, about 1750 in terms of equity. We have about 4 shares at this point, and we are up around $26 on our SPY position so far, which is really great. If we go to the history real quick, you can see I've been buying SPY every single day for a long time now. About 77 bucks a day is kind of what I've been doing. A little bit more, a little bit less every now and then. But yeah, just sticking with that, buying 1% of the account in SPY every day. Once we get our entire account into SPY, we're going to be buying a sustainable amount every single day after that going forward. So yeah, that's the plan, guys. Moving on down. Still have Key, still have MPW, still have Laboo. Not much to say about these guys. Just holding on, collecting dividends, collecting call option premium, and just kind of chilling with them. Moving on down. Sold out of every other yield max position that I had for a pretty nice profit. I'm not selling any of these at a loss, which is why I'm still holding these two. But I was able to close NVDY for, I want to say, like an 8 to 10% profit. I closed AMZ for a really nice profit as well. And I closed Tesla kind of break even. Still profitable, of course, but not a crazy gain there at all. But yeah, we still have Apple and GUI here. We're going to be collecting dividends on these two this month and just holding them till they go profitable. And then we're going to be closing out these guys just to hedge, or not necessarily to hedge, but just to de-risk a little bit. I feel like I was a little bit too spread out because you can see I incurred this huge drop here. I was just really not diversified enough, and I was really over allocated into stocks that weren't necessarily very risk adverse, which is why I'm moving into the S&P. So as you guys know, I've been doing this for probably a month or so now, and that's just been the plan. I just want to really de-risk a lot, so a lot of the money's going into SPY. But yeah, guys, so removed all the unprofitable stocks from my cash secured put list. So I'm only trading cash secured puts on dividend payers at this point, just because I think that's honestly the safest way to go. Dividend paying profitable stocks and companies, just because I think that's the safest way to go. So I've gotten rid of everything that's unprofitable or remotely risky, in my opinion. Because as you know, I had like Plug Power, Neo, ChargePoint, a whole lot of Lucid. I had a whole lot of stocks like that were very risky, and I was just selling weeklies. Now I'm taking a much more of a step back in the portfolio and kind of just letting it do its thing without me having to do as much work. And I think that's not only helped me with my mindset with investing, but it's also helped me with my actual gains, because you can see we're now at an all-time high again, and I just see us hopefully continuing to churn higher. But yeah, guys, that's pretty much everything I wanted to cover in this video. Sorry, it was a little bit of a late video. I was gone on Labor Day weekend, so wasn't able to record a video until now, but at least I got one out. I'll definitely be able to get one out on Saturday next weekend, so look forward to that. And yeah, guys, thank you for watching, and I hope to see you in the next one. Goodbye.